what about the partnership? And of course, we selected our company, and we designed our insurance policy. We're talking to someone who knows what he's doing, and now we know that we have to be with a prominent insurance company. And now another subject comes into effect is a partnership. What is the partnership?
Partnership plans have been around for a while. They, in 1993, states could not set up partnership. It was only 4 states that had them prior to that. That was California, Indiana, Connecticut, and New York were the states that were allowed to have partnership plans. But a partnership plan is really an asset protector where when you get into the need for spending down for Medicaid, they look at your assets and income. Well, the partnership plans look at help protecting the assets. But let me bring it up to speed. In 2006, when the law was passed, actually 2006, and then you went into the partnership plans, which started this year in a lot of states, it allowed the states to take control of that. Now they can establish partnership. Now the partnership is between who? The individual, the state, and the federal government, because it's under what? The Medicaid issues. It doesn't change Medicaid or anything like that. What it does is if you have a long-term care policy that has a partnership policy that has certain requirements that you have to have, like if you're under 60 years old, you must have 5% or a compounding inflation factor in the policy. It's required. So there's certain requirements based on the age you buy it that it must have in there. Now once you have that, and let's say that, let's go back to that pool of money for a second. That 365 pool, let's say, has grown to 500,000, we'll say, because we had an inflation factor. Now with partnership, if you had a partnership plan and you use the partnership plan for your care, the long-term care, and then at some point down the line you start to realize you're going to have to go into Medicaid because you're running out of money. So you're going to go through the Medicaid, and what happens is the pot of money or that pool of money that you have under the partnership plan, that $500,000 offsets dollar for dollar any countable asset under Medicaid. And you can put stocks or bonds or real estate or anything in that pool to identify that as being part of that $500,000. So it can help preserve an estate for someone who's desires to do that, and when they do go on Medicaid, they won't lose those assets and they won't have to spend those otherwise countable assets.
Yeah, okay.